All right. So today we are going to talk about employee benefits. So what is employee benefit, right? And if you just think about it at a very simplistic level, right? So let's say all of us want to start our journey, right? All of us are looking for a job, right? Like, look, I want to do the studies and I want to get the degree and then I want to start a job. So you just have to think it from that perspective, right? So if I were to start a job, right, then I'm going to receive certain benefits or payments, right, from the organization where I'm going to get employed, right? Or in other words, if let's say you are more exciting category of aspiring professional, you say, no, I don't want to get into anybody's employment. I'm going to hire people, right, to work for me. Okay. So in a way, so you have to hire people. So if you have to hire people, you have to make payment, right? And or we see this every day around, right? Whether in our offices where we are working or at our homes where we have employed people, or for a very simple example, let's say our driver, right? So employee benefit is accounting standard which is trying to address that how do you understand all the technical nuances for all of these arrangements, okay? And one of the very important element of an employee benefit from a corporate structuring perspective is employee stock option as well. And employee stock option is something which has been kept out of the scope of Ind AS 19, and that has been covered very, very specifically in Ind AS 102 on accounting for share-based payments, right? So we will not talk about accounting for share-based payments, but we will talk about everything else. So if you take out these share-based payments, everything else in a way is covered under Ind AS 19 as far as it relates to employee benefits, right? So, and I said, what is employee benefit, right? As to what do I am going to receive as an employee in an organization. So let's just think about it, right? So what all do I receive, right? I'm going to receive, say, salary, right? Which is an employee benefit, okay? I'm going to receive, so let me write here, salary, right? Then I'm going to receive what we call as, let's say, allowances, right? Right? And then I'm going to receive retiral benefits. What do we call as retiral benefits? Then I receive, leave encashment, right? And leave encashment could be during the period of service or at the end of the service as well. When we think about retiral benefits in India, it is largely gratuity is what we deal with. In government organization, of course, we also have pension, but in corporate organization, largely we only have gratuity, which is a form of benefit. Then we also have something is called Provident Fund, right? We have Provident Fund to deal with. And then there could be many other types of benefits, right? Like termination payments. If let's say if you are getting laid off, then company has to make certain payments, right? Termination payments. There could be something like bonus is what you get paid, as part of your employment arrangement. So on and so forth. So essentially, what is the meaning of employee benefit is that what you as an organization is required to pay to your employees, and from an employee perspective, what all I'm entitled to receive from the organization, right? And that's the accounting which is being addressed in Ind AS 19, which is what we need to understand. And when you see here, in a way, of all the things which I just listed, essentially it is like a short-term employee benefit, right? Then there is a long-term, and there is something called post-employment, right? Which is once your relationship is over, which is like pension, right? You're no longer working for that company, or something like the termination benefits, right? So on and so forth. So there are kind of several nuances is what we will try and understand as we progress. But if you were to keep it at a very simple level, that what is it you're going to pay to your employee in variety of forms, right? And that's what we need to understand, that what are those potential forms in which you're going to make the payment, and then how do, in a way, they impact accounting and reporting. So what is meant by the term employee benefit, the short-term employee benefit, the post-employment benefit, other long-term employee benefits, employment benefits, or the termination benefits? I mean, these are the different kind of nuances which do arise under the employee arrangement, employer and employee arrangement. And we will try and talk about and understand the accounting, reporting, disclosures, and all of that in relation to that. How to recognize and measure, right? So as you can imagine, for any accounting standard, the structure is, what's the scope? The scope is around employee benefit, around short term, around long term, around post employment, around termination. Then once we are clear on the scope, what's the recognition and the measurement principle? So what will trigger a recognition? Once you know that these are the arrangement which results into a recognition within the standard, then we look at how do I measure the cost, right? And measurement of the cost, the biggest challenge in the context of this standard, right, is that um, something what is called as defined benefit plan, right? And a defined contribution plan. And that is what we will understand a little bit in more detail. So if you have a defined benefit plan, that is where valuation is slightly, in a way, more challenging, okay? And that's where we need actuarial support, right? You just can't do defined benefit plan valuation just like that. So you need a statistical model. What is an actuarial support? Why do we need? It's a statistical model which is being where actuaries are expert in a way, running those models, okay? And they need data. Once you provide them data, then they can give you, this is your liability under the defined benefit plan. And we will try and understand in more detail the difference between defined benefit and the defined contribution, so on and so forth. How do you look at the actuarial valuation and all of that? Though we will not go into the details of the actuarial valuation, because that's not the scope of the Ind AS 19 in a way from that perspective. But we will understand the nuances and the principle around it, right? So how to recognize and measure employee benefits, how to recognize, measure, and disclose defined contribution and defined benefit plans. So at a very high level, just to give you a context and the perspective, what's the distinction between a defined contribution and a defined benefit? Defined contribution is like Provident Fund, okay? So Provident Fund is a defined contribution plan in general, right? Not in all situations. There is a complexity there, and I'm sure some of you already know it, because that has been addressed in AS 15 as well. So defined, why Provident Fund? Because you know how much I need to contribute to the pool, right? Which is, let's say, 12%. So if that is what I need to contribute, that's like a defined contribution plan. And then you have a defined benefit plan. So what's a defined benefit plan? Is like something like gratuity. Okay, payment of gratuity is a defined benefit plan. And why is that being called a defined benefit plan? Is in a way because the payment which I need to make to an employee is actually linked to a formula. Okay, it is not determinable today. Okay, it is linked to a formula which can only be established on the date of the retirement of that employee. Okay, because it is linked to the number of years of service. Now, I don't know how many years of this guy will continue to be in service. Now, it is linked to your last drawn salary. Now, I don't know what will be your last drawn salary in a way from that perspective. Now, then you have to complete a minimum number of years of service, right? Now, of course, there is a new labor code. Some of you may already be knowing that, and that possibly is doing away with this requirement that you have to be in a minimum, in a way, I would say, the service period. So in a way, that we need to understand the distinction, defined contribution, that I got to contribute this much beyond the point I have no liability. In a defined benefit, it is linked to a formula, so I need to assess. It's like a subject matter of an estimate where a defined contribution, is something which is determinable, right, with more finality. So that's the distinction between defined contribution and defined benefit, and we will talk about that, right, at a great degree of understanding, right? Uh, how to apply actuarial valuations in recognition and measurement of defined benefit plan. So how do the actuary, kind of plays a role? What are the different terms which you need to be aware of the likes of projected benefit obligation, right? Return on plan assets, right? Actuarial gain or loss, and so on and so forth. So we will try and understand all of that, right, as we progress. And then how to present and disclose employee benefits in the financial statement as per Ind AS 19. So ordinarily, you will see that the disclosure on employee benefits, right? The disclosure on employee benefit is one of the longest disclosures. So if I were to say that what are the 3 4 disclosures which takes the maximum amount of space, is employee benefit, is income taxes, right? Is segments, right? And related party. You know, extensive amounts of disclosure is what you need to make in relation to employee benefits, in relation to actuary, all of the tables which are out there, which comes from the actuarial report. All of that is what we need to understand, and then we need to apply and in a way present as part of the financial statement. So again, to give you, as I said, employee benefit, you got to first think at a philosophical level. What is it we're trying to cover here? We're trying to cover anything and everything what an organization relationship with an employee. So what do I pay to an employee, right? And then from an employee perspective, what do I'm receiving from an employer? And then how do you categorize them? As what you see here is like, what is short term, what is post employment, what is other long term, and what are the termination benefits. There are different categories in which you can box your benefit. Let's say, some companies do give to say, if you were to complete 10 years of my employment, I'll give you, let's say, 1 lakh rupees bonus, right? Now, that's also an employee benefit. Now, that's only eligible to those guys who will complete 10 years, right? So in a way, that's a other long-term employee benefit. That's not a short-term. That's not a post-employment. That's a other long-term employee benefit. That's not a termination benefit. Okay. So depending upon, and companies do all kinds of structure, right? In terms of employee retention strategy, in terms of employee motivation strategy, in terms of trying to figure out how do I reward distinctive performance, right? And as you keep on becoming big, you want to then give it a structure as it to give it to make it ad hoc, right? And the moment you try to give it a structure or a policy, then it needs to be kind of dealt with from an accounting and reporting perspective. All right. Okay. Now we look at the examination trend, right? Since May of 2015. So when we see this, there's a whole lot of thing, which is out here. And what I see here, that this was used to be consistently tested, right, from 2015 to 2017. But in the new syllabus, right, we're not seeing a whole lot of kind of a coverage here, right? In the old syllabus, I think it was covered. In the new syllabus, only 5 marks, right? And that also in May of 2019. But I think as a topic, I would say it's not a complex topic. Okay, it's not a complex topic because the bit of complexity from an accounting principle perspective, um, is there more from an actuarial valuation perspective. Okay, so the accounting principles are fairly sorted. There is not a whole lot of interpretation issues, which we see on employee benefit. It is either a short term or a long term or a defined benefit or a contribution, and you need to accrue for the cost, right? If I'm under an obligation to for a payment to my employee for the services being performed, then we need to, of course, accrue the cost in the financial statement. Now, there could be an issue around discounting. So if it is a long term, I don't need to pay now, I can pay after 3 years. You have to discount it, right? To present value, so on and so forth. So that way, it's not a complex subject, as I said, which we often deal with. So I would encourage each one of you to again familiarize yourself, right, with this topic. Be clear on the principles. I think the key for you to get it right is to clear on the principles, and also visualize, right? Whenever you're thinking about a question on this, that if in your thinking that if I am that employee or if I am that employer, right? How is it going to impact my cash flows, right? How it should impact in a way my asset or liability situation, and then possibly you will be able to visualize the appropriate accounting in a way for that particular scenario, right? And we will try and cover a whole lot of examples as we progress, and we'll continue to talk you through as to how do you deal with accounting, reporting, measurement, disclosures, and so on and so forth. Okay. One of the objectives of the standard is to provide the accounting and disclosure for employee benefits. It requires an entity to recognize, right? Ind AS 19 requires an entity to recognize a liability for advanced services received from an employee. So in a way, if I have not made the payment, so we don't make the payment on a daily basis. As you know, the payments are being made on a monthly basis. In US, actually, you get paid twice a month, right? They have to cut a check fortnightly, right? That's how the salary is being paid in US. But in India, we normally the trend is here to pay salary on a monthly basis, right? And then there could be some issues around accrual. So to say, many companies pay salary, let's say on 29th, a day before the month end. Some pay a day after the month end. Some pay on the day of the month end. So we see wide variety of practice, right? Depending upon what somebody is following, you need to accrue for that liability till the time this is being paid out in a way. And an expense for consumption of economic benefits raised from the services provided by an employee in exchange for the employee benefit, right? From that perspective. So that's what, in a way, we need to look at. So all the arrangement between the employer and the employee outside of stock option is what we need to look at, get captured from an Ind AS 19 perspective. So it deals with all, as I said, standards shall be applied by an employer in accounting for all employee benefits other than benefits to which the Ind AS 102 share-based payment is applicable. And of course, we will talk at length as to how do you account for share-based payment as well. That's one of the complex topic, right? And especially if you intend to join, a startup ecosystem, right? Or a company which is in a big tech, or a company which is looking at tech as a platform in a way to grow business. So their stock options is a very very meaningful way of attracting talent, right? In terms of compensating a talent, and hence the accounting of stock options we need to understand, right? So the standard does not deal with reporting by employee benefit plans, right? So what is the meaning of employee benefit plans? Let's say if you are a trust, who is being incorporated to run a gratuity program for a company, right? So you are a employee benefit trust. Now this is not addressed by Ind AS 19. There's another Ind AS on that, or there's another, in a way, I would say there's an international standard on that, and I think we don't have an Ind AS on that, because the Ind AS in India is not applicable to trusts, so to say. Neither they have a voluntary choice to adopt. Okay, so they'll continue to be guided by their existing ways of doing accounting, reporting, disclosures, and all of that. So essentially, we're saying standard does not deal with reporting by employee benefit plans per se. Mostly, they are either run by the private corporations through your trust structure, or some of that is also being run by LICs of the world, right? Where they, in a way, run this for a lot of corporates, and of course, the government, the PF trust and all, is run by the government from that perspective. Employee benefits to which this standard applies include those provided under formal plans or agreements between an entity and its individual employee, group of employee, and their representative, as required by law. Let's say, many times you don't have an agreement, but you know that I need to make a payment of bonus under the Payment of Bonus Act, right? Or I need to make payment of gratuity under the Payment of Gratuity Act, or I need to make payment of leave encashment, and so on and so forth, right? So either it is written in the contract between the employer and the employee, or it is in a way dictated by a law. Both of them is what you need to look at. And as I said, the if you are in operations in a country outside India, so that also, all of the you are then driven by the law of that land, but accounting will be done as per the principles of Ind AS 19. Now, this is important. By those informal practices that give rise to a constructive obligations, in a way that, even though you don't possibly say that in the offer letter, but we know that after, if I complete 5 years of service, you're going to reward that employee with X amount of incentive, right? Now, if that is a said practice in the company, in a way that becomes a constructive obligation, unless you decides to do it otherwise. So would cause unacceptable damage to its relationship. So in a way, if you want to change it, right, then you got to do it in a very structured manner. Otherwise, it just kind of creates a strain between the employer and the employee. So essentially, what's covered as part of the scope, as I said, uh, all arrangements between employer and employee is covered as part of the scope. What is not covered is the stock option, because you have a separate accounting standard. What is not covered, the accounting by the employee benefit plans itself, those trusts and all of them. There's a separate international standard on that. In India, that's not relevant because we're not applying Ind AS to those structures, those trusts and all. They continue to be guided by Indian GAAP. And then the third element where this is applicable in a way that, even though it is not written, but if the informal practice results into a constructive obligation, they're also covered by Ind AS 19. So looking at the coverage, right, from an employee benefits perspective, as I said, it includes short-term benefit. It includes post-employment benefit. It includes other long-term employee benefits, and it also includes termination benefit, right? And it also includes the benefits which are provided to the employees, right, or the dependents, right? Many times you may want to provide benefits to dependents, right? Let's say an insurance policy, right? Keyman insurance policy, which many companies have. Most of them have been, in a way, they get it underwritten by a third party. But let's say if you've not done it by a third party, then you got to again provide for that, even though the benefit will go to their dependents or to the beneficiaries, right? So in all scenarios, this is all part of the scope, right? It may provide service to an entity on full time or part time, right? Or on a casual basis or on temporary basis. So all kinds of arrangement, right? Whatever type of arrangement you have, that's in a way covered. The only thing, which you need to kind of reflect on is when there is, let's say, third party contractor which is providing them resources, so that becomes a contracting services. That's not an employee benefit services, so to say. Okay, I'm sure, I'm hoping that you're getting this distinction. What I'm just trying to say here is that this is all full-time, part-time, casual, or temporary. All of them are supposed to be on the rolls or directly contracted by the company. Okay, on the rolls of the company, or direct relationship, direct contractual relationship, right? Direct contractual relationship with the direct contractual relationship with the employee is what we're talking here. But if you have an indirect contractual relationship, right, in a way that you got a vendor in between, So there is the company, then there is a vendor, and then there is this worker, so to say, right? Who is working. Then you are not guided by the Ind AS 19. Then in a way, it's basically, there is a supplier arrangement which is now put in place, and you need to then deal with this appropriately under other accounting standard for its accounting and reporting. Employee benefit may be settled by the payment, of goods, or goods or services made either directly to employees, right? Silver payments, right? You can by either by way of provision of goods or services, by directly or to their spouses, right? The children or the other dependents, or in some cases as an insurance company, we have said, right? So employee include directors and other management personnel as well, right? It includes the directors and other management personnel as well, right? It includes the directors and other. So all of that. So if you think about a company, all of them in the ecosystem associated directly with the company, all of them in a way are employees of the company, and whatever payments I'm making to them in the form of short-term, post-employment, other long-term, and termination, I need to look at accounting and reporting for guidance under Ind AS 19. If it is stock option, outside the scope. If it is accounting by the employee benefit plan itself, it is to be dealt by another standard, which is not relevant in the Indian context. And again, the informal practices, that also in a way is covered as part of this standard. And whosoever, you need to make the payment for the services offered by the employee, right? Whether you make the payment to the employee or to dependents, or to any other beneficiary, all of them in a way is covered as part of this standard. And the arrangement could be full-time, part-time, or casual, or temporary, all of them. Awesome. Now when you look at some of the categories, right? As we said, short-term, post-employment, other long employment, and termination, all these categories have different characteristics, right? And hence the standard has specified separate requirement for each such category. All of them are, in a way, short-term is just paid on a month-on-month basis, right? When you look at a post-employment, as I said, gratuity or a pension, and then these are formula-driven to be paid, and then other long-term, I said, if I were to complete 10 years, if I were to complete 5 years, if I were to do this, if I were to do that, you may get paid something over and above, or differentially, from that perspective. And termination, which is, of course, not a happy situation, but that's a contractual arrangement, right? That's a contractual arrangement. I always look at termination also. At the end of the day, employee also leave organization, right? And they leave organization at their will, right? So if the employer also want to let go, I think that's part of life, right? But the good part is that there are provisions which do protect employees in those situations, and we have to deal with it from an accounting and reporting perspective, right? So employee benefits, again, if I were to look at it pictorially, these are 4 different categories of employee benefit, is what we need to deal with. And we will try and understand the accounting nuance for each of these categories in greater degree of detail, whether it's a short term, other long term, post employment, or termination benefit.